Hi and welcome to Scalping Addiction. My name is Eric. Today we're going to look briefly at the gold rally of 2025, which is spectacular, almost vertical. I would like to look with you some eye time frames like a monthly, weekly, and daily to know what happened. Obviously, in 2025, I try to determine what could happen at the beginning of the year. So, thank you to be there. If you like my content, I invite you to subscribe and push the button for the notifications. And if you have any comments or information, you're welcome to write down the video, and it's gonna be a pleasure for me to respond to you. Okay. So what we're going to see first is the gold on the monthly chart. First of all, such a rally. In fact, if you look at the three last years, sorry. So starting on October 22nd, right? So at the price of $1,600, we have a 180% rally since then. So in 3 years. It's not typical. I mean, for any asset to have this, but also you have a kind of asset like Nvidia, the stock, the AI crazy bubble. So yes, they really increase their stock value during the last years. But for gold, it's something big. So this commodity is usually is used as an inflation like asset to protect you, or there's different possibilities with gold. Just it's a store of value, in fact. So a majority, because gold is 10% or more or less used in the industrial process. So gold is really a store of value. So if we go to the chart, as we are at the end of the year, hope you have a good Christmas and Happy New Year to you too, by the way. I would like to tell you that, okay, yes, we have the month who will close this week. But as we see here, this candlestick, if we talk about candlestick first, could be what we call, if it's a it's not a candle of hesitation that we call that. We have usually a big small body in the middle, and you have the big the price went very high and very low after. So this is not the case here, but that's a candle that we could see a kind of shooting star. This is not precisely what the theory said, but this is um, because the rally was very vertical at the end, and the figure here is bearish. We call that an ascending broadening wedge, almost a option channel. But when you have this type of structure, and we had one before also, usually we're near a pullback. So gold, it's not crazy, I think, to because we are at 4,000. The all-time high was at $4,549. So as we hear in the last weeks, it's always like that when we have climax rally. So when I mean climax, what it means is that there's almost no retracement, no pullbacks. So we're not going to the moon in one way. I don't know what will be the price of gold in 10 years, but for now, we can plan that probably we'll have a pullback. Maybe, I don't know, maybe at the beginning of the year, or maybe at the end of the year. It's not a financial advice, it's just a matter of logic. And there's a lot of reasons that can explain what I'm telling you right now. So what I see, first of all starts from an ascending broadening wedge, which is bearish. I mean, when we say bearish, it's just the impulsion at the beginning. It doesn't determine the price as well, where you will go and when. This is not. This is just to see what's the structure at the beginning of the uptrend impulsion. So that's what we have. And as you can see, this is often touch. So the price is always, knocking. And here you just pass this structure up north. Usually it will have been to go south for a bit. So it wasn't the case. Why? It's because there's completely fear of missing out right now. It's FOMO. So everybody's buying gold. When my mother buy gold, it means that we're near the peak. So this is my opinion. It's not an advice. So what I mean, it's that probably we could go if we trace the Fibonacci retracements tool for the since the lowest point I was telling you 3 years ago, we could have this pullback relatively. It's not a sharp movement that I plan for me, could be on the 0.236 or 0.382 Fibonacci. What it means is that when you have a strong rally to the north with with an asset, usually the pullbacks are, I can say, short and also not very deep. So if we go for a strong rally with an asset, it's really, we can consider that it's logic to revisit these places. So it will be between, we'll say, $3,430 and $3,850 in almost $60. Right now we are at $4,336. So if we go with the first retracement I'm talking about at 0 to 36, we're talking about a possibility, potential downtrend of about minus 11%. For the other scenario, minus 20. So you have to understand as well that it's not projection, it's only what um, I will share with you and explain to you what's my minding regarding this. And also, it's just to, I please, this is my mission to help you to take different sources and different arguments to have your own, opinion after when you have a lot of information that can help you to have a clear position relative to an asset, which gold is very, very an asset which is important as well in the financial markets. So it could be something like, return back to the what we call the neckline, because here we had a ascending triangle, which is bullish. As you can see, it worked very well. So we had a clear breakout to the north, which was supposed to be the case. So what it means, just to explain, is that ascending triangle, you have all the tops almost at the same price. Here it's like there's a resistance a resistance, and the lowest points are higher. So that's what makes us to be possible to draw a triangle, and in this case this is bullish. That's what it did. I mentioned because it's not all the asset that responds to the technical analysis. When it's bullish, it responds, I mean, to bullish structures as well. But here, we're starting to have bear structures. A lot of things can explain also a possible pullback. First of all, look at this. Here, almost 93. It's the relative strength index, the RSI. So it helps us to determine if there's an overbought or oversold situation. Right now, it's clearly an overbought situation at 93. We can consider that starting from relatively 65, you can have starting of a probably sharp rally to in the overbought zone. So that's the case. So what we can see in monthly, also that's the other point. It went so fast that you have a lot of fair value gap has been created. Fair value gap, it's like magnetic for the price. It always revisit usually these parts. I don't know when, we don't know when, but usually it's magnetic. It's you revisit this zone further or almost all the time. So for now, I'm still bullish on gold. Everybody is talking about when I mean everybody, I mean experts that I read and hear and watch, and they're talking about 5 to 6 thousand before a sharp pullback. For me, it will be very very good for the asset to, you know, breathe a little bit, maybe to create. It will be very nice if we did like this, for instance. Maybe not here, but we're just looking at what it could be. We could create a kind of range. So, and as it is after an uptrend, and if the range is, how can we say, if the range is very clean in the structure of the candles, we could have this type of structure and consolidation for a while. I don't know. Gold as is an asset that is overbought, an asset that right now it's not only a matter of institutionals, there's retails in the market very, very deep in the traded funds, and it's amazing. Probably a generational situation. This is my opinion. So just remove the color. Okay. So yes, so if we have a kind of range, why not? We could just draw something just to look at what it could be. So like this, like this. Oh, maybe we'll do, you have the structure here in blue and in so we could rebound here and go up after to reach the highest points. So at this time, if it's the case, I will change the color. It's gonna be easier to see. So it could give us a kind of double bottom or kind of what we call a cup and handle. So it's all bullish. We need this consolidation sometimes just to, you know, uh, consolidate the market and also to help the indicators to go lower and have a situation where sellers and buyers are more in a balance. Because right now it's totally buyers who have the situation on them. Okay, so this is for the monthly part. We'll see at the beginning of the year. For now, there's a drop today, but it's relative probably to the end of the year and they're taking profit. So it's normal and it's good, in fact. So we'll see and we will look at it further on January. Okay, perfect. For the weekly part, the week is very young. We have 3 days and 23 hours, so almost 4 days before it finishes. But we have to look at already what we have on this chart because it's really important. Here, what we have for now, it's what we call a bearish engulfing. What it means is that the previous candle, which is green, um, will be, maybe, I don't know, but for now it's the case, will be 100% a gap by the bearish, the red candle. So if we finish like on even or lower than this previous green candle, it's called, as I mentioned, a bearish engulfing, and it's good synonym of bearish reversal, so trend reversal, which doesn't mean that the gold would go to 3000 in 1 month. That's not the case, but it means that we could assist to this pullback in the near future. So if we see at the target 38.57, okay, just to see. Okay, it's almost, that's great. So it's almost here on the 236 Fibonacci. Yes. Okay, I wasn't sure. Perfect. So yeah, we could have this pullback. It's something for me. It will be an opportunity because I'm a fan of gold, I mean of the rally, not necessarily the asset, and because it's a store of value. This intrinsic value is about maybe 10% of the market value for now for gold. So, as the expert said, not me. So, we could have, yes, this sharp rally after, and the point is not only, okay, will it go to 5,000, 6,000? This is not the point. The point is, where is right now the main support? We'll see further, but we need this pullback to know that. Maybe we will never go, less than 3,000 or something. It depends. So, but usually there's not this kind of volatility on gold. We saw that in the past, a lot of decades ago, but for now it's maybe an opportunity of a life. So as we see here, just to complete the weekly part, we have a potential bearish reversal situation here also, because for instance, if we close just, we go to reach this fair value gap here and the neckline of what we call a rounding bottom. I will trace the support almost. Okay. So it means that near 40 to 40, $4,240. This is the neckline of this rounding bottom bullish that has been break to the north. So we should revisit at least this price because this is the neckline. Usually there's always a pullback. And also there's good possibilities because as you can see here, it went very fast. We need to revisit these parts one day. So in weekly and monthly, we start to talk about this kind of fallbacks soon. On the daily chart, which is more the pulse of the market, if you prefer, it was nice. I have to tell you, from a graphic, from a chart perspective, it was almost perfect what we saw. I will explain to you after the uptrend for many months. We had pullbacks, and if we see, because I hear sometimes, oh, gold will never pull back more than 5% or whatever. I'm in daily, I'm not in 1980, okay? So if you go to where it starts from, for the figure I will explain after, to the lowest, so gold lost 10% and not in 1 month and a half, in few days. So we have to be careful with this kind of asset. I'll never say enough that it's something that, because when there's a reversal, there's a lot of institution that have big position. If they try just to short the market, you have a sharp correction that can occur. So be careful, please. So yeah, to explain to you the structure, though, when we had this uptrend, very vertical, as you can see, we had this correction, and we created in purple here. It's what we call a falling wedge, which is bullish, and it was the case. It has been, if we will just trace an arrow. If I remember where it is. Okay, so at this time here, we had this breakout. The green candle you can see. So we had the structure here. You don't know the as well the amplitude of the movement, but you have here 80% to go north, and that's what it did. To continue with the structure, you have here, after this breakout, which was very clean, you have here an ascending triangle that I was talking before. This ascending triangle is bullish, and also the same reaction, it was bullish. So we had this breakout to the north. But what I really like here, I like these structures, but it's the final figure of what it did with all these beautiful, figure bullish figures. Uh, it did a cup and handle. If you can see here, I will trace in white. I like to draw. but I'm not an artist. Yeah, so we have here what we call a cup and handle. So you have the cup. Usually there's sometimes a breakout, a direct breakout, or sometimes there's just when you arrive, to what we call the neckline, the future neckline, you have this pullback to create the handle. After that, we expect to have this breakout to the north. It has been the case, but as you can see with the neckline, how precise it is, you add, the price were following the line. He was fighting. So buyers, bulls against bears were fighting for this, and this is the bulls won. So it was very clean. All this is very very clean. So you have also here. It's not draw, but you can see with my curvy line here. So what it is, it's a big rounding bottom, including the famous falling wedge, my cup and handle, and here the range, kind of range, but it was a bull flag also. So it means that we're supposed with all these figures, it's almost impossible if I can say, because it's so bullish, that you will create the round and have a breakout eventually to the north. That's what it did. The particularity here, and we do not see this a lot on gold since a lot of months, it's a clear figure that is bearish, but means not for, as I mentioned, a sharp correction or something like that. No, no. It's just that the figure need to be, break to the south, and that's what happened here. Obviously, it was an ascending broadening wedge, which is bearish. We have here a clear taking profit situation. That's the point. But what is great here for shorters is that there's an IFVJ VG that has been created. So it's a kind of resistance right now. So okay, the day just started. We have here a doji for the moment, but we have really a good possibility to go very fast to this neckline again, to test it again. So you can see different assets. It's almost always working like this, because I'll explain you that gold is his fair value, intrinsic value. In fact, I'm not an expert on gold. What I can say, it's following the expert said, if it's not a store of value, boy, it is since uh, a lot of years, like 3, 4, 5,000 years. It will not change tomorrow, but I mean, it's really a store of value. So this kind of asset can very change rapidly, and there's often big movement. I mean, as pullbacks. That's what we can see here for gold. So this is what I was telling you today about gold. I would like also to tell you that there's not only, because I was talking about the relative strength index just before, I was talking about the situation in multi that was 93, but we have also in weekly we're near 70. So there's a lot of reasons that could explain this pullback. So be careful. You have to look at a lot of different sources for gold. Um, it's difficult to analyze, to have a clear view for the next year, because there's a lot of demands. For instance, for central banks, there is will stop to buy gold to put this in, as a reserve, and also there's others that start to buy gold. So there is a new way that gold is seeing. It has always been seen as a store of value, but right now I think there's a lack of confidence in the US dollar. And that's what I had as information also when I look at the what the experts said. So it just rushed also the gold price to go higher as well. Also other like the possibility, or well, people are already afraid that the USA just decide to have a custom charge for all what are commodities such as silver, palladium, others. So it could be very difficult on a point industrial for some. For gold, it's more a matter to repatriate the gold to the US to avoid this kind of situation. So gold is on end of many person, you will say, but it's also on end of a lot of Americans institutional right now that just import a lot of gold in the last months. So a lot of reason that can explain to us that gold, there's always an upside possible, but this pullback on the short term would be a better opportunity for me to be more secure to take position further on this asset. So thank you very much to have watched this video. I'm almost new on YouTube. If you like my content, you can subscribe and activate the notification. And if you have any comments, feel free to write to me, and it's gonna be a pleasure to help you. Thank you. I wish you a good day. Bye bye.